Hello friends, James Stevenson back with part 5 in my Tesla earnings forecast video review series. We'll see if I can get through the rest of my forecast in this video, all except for the earnings preview, the one where I show it to you in the same format that Tesla releases it on earnings day. I think I'll save that one for last. This is part 5 of 6, I think. If all goes well, right Loki? There you can see Loki is curled up under a canopy of freshly laundered blue blankies. We washed his bed and his toys and his blankies yesterday, so he is comfortable and curled up. You can keep an eye on him in the Loki cam below me while I turn my attention to this thread, my 69 tweet forecast thread, and I'll point out that if you didn't know there were supposed to be 69 tweets and go looking for them, you may have given up after the 29th numbered tweet here, because that's the point at which Twitter shows you, or X, shows you the see more link instead of showing you the rest of the tweets that are in the thread. It's after the 31st post in a thread. Most of you have probably never made a thread 31 posts or longer, but that is the arbitrary point in time. Why did it come after tweet 29? Because I put in 2 unnumbered tweets here about stopping to take lunch and making a funny Tolkien quote joke there. So that's how the count got thrown off by 2. But the very next tweet is the one we're going to look at next, and I'm not going to show it to you this way because that way probably the numbers are too small for you to see them. So instead of showing it to you as tweeted, I'm going to show it to you from my live Tesla earnings forecast model. This is where we left off in the previous video, part 4. We got to the bottom of the cost of sales and cost of sales percentage sections, and I just showed you, hey, there's the total gross margin that I'm forecasting, right? So, having gone through all 4 of those parts, we know where the production and deliveries come from part 1. We know where the revenue comes from part 2, and we know where the rest of it comes from parts 3 and 4. So let's take a look at the income statement that we're forecasting. The beauty of this is it's just whatever is left. There is one little hitch in it, which is the currency translation impact. You'll see Tesla report that there is an impact from reporting your numbers in your home country's currency, wherever your stock is listed, wherever your company is incorporated, determines your reporting currency. But some of Tesla's transactions internationally occur in other currencies, right? So they have bank accounts with Chinese yuan in them or euros. And Tesla receives revenue in that foreign currency, and Tesla spends money in that foreign currency and holds it in their bank accounts in that foreign currency. So at no point in any of that process did they need to convert the currency to US dollars. They just have to report it in total as US dollars. That's what the currency translation impact is. I've got a section for it way at the end that I might show you. There's no way we'll get to it in this video. I don't have enough time. But this first section here is the total revenues. We're lifting these numbers from the revenue section that we saw already. So this is a repeat of numbers you've already seen from part 2. For automotive sales, including regulatory credits, there's the regulatory credits number, and there's the leasing and resale revenue number. So the 3 of these combined make up the total below them. So that's the 19.625 as Tesla reported it in Q3. Then one of these numbers has that number in it. So that's those. Then we get to the energy generation and storage number here. So that's Tesla Energy Division. I've got that revenue increasing some. We saw in my forecast. Services and other, this number also tends to rise over time, and that's what I've got in my forecast mostly. Then we've got total revenues here, $26.6 billion-ish is what I'm forecasting. I'm not going to be heartbroken if Tesla reports some different number than that. That's just what's in my forecast. Then we've got the automotive cost of sales here. Got that at almost $18 billion, with another 0.3 for leasing, bringing that to over 18.2 billion there. Energy generation and storage getting more profitable all the time. A really strong profit reported in Q3. I don't know if we'll see a margin that high again right away, but that business will improve over time as megapacks cost less for Tesla to make and can be sold for more. And there's services and other, not a very big money maker, leading to total cost of sales, 21.9 billion worth of total cost of sales is what I'm estimating. There's that 17.8% gross margin percentage again. Here you can see the currency translation impact on gross margin. Don't get this confused with another number Tesla reports for currency translation impact. Sometimes they'll call out in the investor letter that there was 0.7 billion worth of impact on revenue from currency translation. Well, normally, under normal circumstances, the currency translation impact is going to go the same direction for revenue as it goes for cost of sales. So the net is going to be a small number, or small relative to the revenue impact, right? Because it's being offset by the same kind of impact from the cost side. So that's what these numbers are giving you per the 10Q or the 10K if it's the end of the year. Research and development, another 1.1 billion is what I'm expecting there. SG&A costs rising to a record high 1.3 billion and going higher from there next year as Tesla increases its scope and scale globally. They need to hire more people and pay them partially with stock compensation, that sort of thing. So that gets you to a income or a loss from operations number of a little over 2 billion, which is what we saw in Q1 and Q2. It was a little less than that in Q3. But operating margin just below 9% is what I'm forecasting here. It was lower than that in Q3, hopefully not as bad in Q4. We'll see what we get when the numbers get reported. For interest income, I'm forecasting a real similar number to what we saw in Q3, a little less. The prior quarters were less, so we'll see if the interest income beats or misses that number. Interest expense here, I'm forecasting a similar number to what we saw in Q1 and Q2. And other income / expense is a total wild card. You don't know what you get until you get it. Could be positive, could be negative. This number jumps around all over the place, so very difficult to forecast that number accurately, but you have to forecast something. So I do have a number in there, which leaves you with income or loss before income taxes. Here's the biggest question mark in my forecast. Most folks will not forecast what I have here, which is Tesla taking the rest of the favorability they have left over for benefit from prior year's losses. So the IRS lets you roll over prior year's losses and net them against the taxes you owe. And I think Tesla has a bunch of that favorability left over here. So if I wipe this out for a second, you'll see what I would be forecasting is something that looks more like what we've seen in the other quarters this year, about 0.2 billion, but I'm netting that down by about 0.7 billion to take the rest of that deferred tax asset in Q4. We'll see if Tesla does or doesn't. It swings the EPS by about 21 cents if they do or don't take that 0.7 billion of favorability. Then we've got the net income or loss here. Net income or loss attributable to non-controlling and redeemable redeemable non-controlling interests in subsidiaries, less buyout of non-controlling interests. That's a whole lot of stuff to just say it's probably going to be a small number. It might be positive or it might be negative. And that leaves you with your GAAP net income number as reported. So what comes after that? Well, let's talk about shares outstanding. I've got a forecast that those are going to rise by 4 million shares or so from Q3 to Q4, with the shares outstanding diluted rising by a similar 4 million shares amount. What's the difference between these? This one are the shares that have been exercised and already exist and are owned by somebody. The diluted share count includes stock options that have vested but have not yet been exercised. So 304 million of these are owned by Elon Musk, or almost all of them. Under his 2018 CEO Performance Award package, he has until March 2028 to decide whether he wants to exercise those or not. He wants to exercise them, even though he will owe record amounts of taxes that nobody has ever paid before on the capital gains. He's going to have to sell most of those shares immediately upon exercise, is all I can imagine he'll be able to do. I mean, unless he trips over many, many billions of dollars and can afford to pay those taxes in cash between now and then. So you've got 94 cents worth of GAAP earnings per share basic or 85 cents per share diluted. Everybody uses the diluted number because these shares are going to exist. They just haven't been exercised by Elon yet, so you may as well count them. And there's that 21 cent impact. Remember, we already saw 21 cents get declared in Q4 of 2022, so 1 year ago, we saw half that number come through, and then a teensy amount of it in Q1. So I'm just forecasting that the other half of those benefits will come through at the end of 2023. So what else do we have here? Well, there's a bunch of other stuff below the income statement here. One of these is the Tesla stock price forecast. If you believe 30x the next 12 months adjusted EBITDA is a decent way of valuing a stock. So I've got that 1 year price target at 268, but you can see next quarter that rises to into the 300s by the end of next year, through the 400s, 500s, etc., on the strength of how much EBITDA Tesla will be producing in future years. If you think 30x is the right multiple for that adjusted EBITDA on a rapidly growing company, a company that's growing earnings quickly. Here's the trailing 6-month average stock price. So these are actuals now, and then in the future I have to forecast what I think that will be. So I've got those numbers there. If you're curious what I think, then there's the trailing 6-month market capitalization. That was important for that 2018 CEO Performance Award package, but Elon long ago achieved the $650 billion market cap. It was actually Q2 of 2021 when that number had been achieved to get him those shares. Then there's quarterly annualized adjusted EBITDA. So you just take the most recent quarter's adjusted EBITDA, you multiply it by 4. That's how you annualize quarterly numbers. Then highest CEO plan EBITDA milestone achieved. We're past the top end, right? 14 billion was the highest it could go, I think, under that plan. And then there's the highest CEO plan revenue milestone achieved. Those are still going. Elon didn't need to achieve all 16. He only needed to achieve 12 of the 16 to get awarded all 12 tranches under that plan. So yeah, we're about to cross $100 billion worth of revenue over the 12 trailing months. That'll either happen for the full year 2023, unlikely, or it'll happen in 2024. So I've got some quarter ending dates there so I can do some calculations. Here's the CEO bonus forecast. You can see Elon has earned all 304 million shares in those 12 tranches achieved. But I'm forecasting that by the end of 2024, he'll be earning more tranches that'll be worth more shares. So maybe they'll be giving him the right to purchase a few million more Tesla shares throughout 2024 and 2025. There hasn't been any CEO stock compensation for a while, since the end of 2022. So all 2023, Elon was working for free. And that'll continue to be true until the board has a new plan for him. That is limited by that court case that's still ongoing in Delaware court. A judge needs to rule on the previous stock plan before Tesla certainly could award anything similar to Elon again if the court is going to throw it out. That seems unlikely, but it could happen, I guess. Then we've got the non-stock SG&A expense and the stock-based SG&A expense. So I separated out Elon's compensation from the rest of SG&A because it does hit within SG&A, but I wanted to be able to forecast those separately. As you can see, the other SG&A stock compensation continues hitting about $100 million per quarter worth of compensation in the form of stock for folks who work in Tesla's selling, general, and administrative areas, as opposed to working in a factory where that stock compensation gets recorded as cost of revenues, or in the research and development area, or in restructuring and other, which is where it would hit if people were laid off and took stock compensation upon being laid off. That doesn't happen too often. So that gets you to the total stock-based compensation line here. Sometimes you'll see a teeny amount hit for other, including dilutive convertible debt, buyout of non-controlling interests, and etc. But those are the adjustments you need. Mostly it's just throwing out the stock compensation expense to get you to non-GAAP earnings. Why do you throw out the stock compensation expense? Because it's not a real cash expense that the company has to pay. It's just the company magically making stock options to give to board members or to employees or the CEO or whoever. That's not a cash expense to the company. So Wall Street throws it out and says that's not anything you would need to raise cash to have to pay for, so we're not going to consider it an expense in the non-GAAP earnings line. So I've got 13% non-GAAP earnings as a percent of revenue, mostly due to that favorable tax treatment in Q4 that I'm forecasting that may or may not happen. That's how you get to 99 cents worth of non-GAAP earnings. We saw a chart that had the breakdown of that with everything per share in one of the previous videos. Then I have a section here on PEG ratio, so I labeled it PEG ratio over here. That's an important thing to look at if you're a stock investor trying to invest in a growth company, a company that's rapidly growing their earnings. What is this company worth? Well, let's start with the next 12 months non-GAAP EPS. There's no such thing as a lifetime achievement award for stocks. Stocks are all about what's going to happen in the future, what's going to happen next, not what happened in the past. So you look at the next 12 months non-GAAP EPS expectation for this company. I'm using my forecast here rather than what Wall Street expects. Then there's the year-over-year non-GAAP EPS increase. So I've got it increasing by about $2 over the next 12 months, which is a growth rate of 66%. Then there's a PE ratio trailing 12-month non-GAAP earnings number here. So I'm just looking at 12 trailing month non-GAAP earnings versus the price to get to that PE ratio. Then I've got one here that's based on the 12 trailing month GAAP earnings, and I've got one here based on the next 12 months GAAP earnings. So it's a lower PE on the next 12 months GAAP earnings. And then I've got the PEG ratio here, the last 12 months PE divided by the next 12 months growth rate. So what are we looking at if we take the fraction of this over that? It's a 1.1 there. It got negative for a while because Tesla was losing EPS year over year early in 2023. Then we've got the Peter Lynch style PEG equals 1 price target. So if the PEG ought to be 1, how much should the stock price be? Then we've got some NAs here with a 12-month price target historic PEG ratio adjusted because the earnings have been negative here for a while, but that'll flip in the future back into positive territory again and stop being an NA. Then Stevenson indicator is here. I showed you that one earlier. This is just a dumb linear function. What happens if Tesla stock price rises at $1.69 every 3 days? That's all. That's all that says and has ever said. It's never been a stock price target. So here's GAAP net income, just a little reconciliation here from GAAP net income to adjusted EBITDA. How do you walk from one to the other? Well, you need to add back the interest expense. You need to back out the provision for income taxes, make an adjustment for depreciation, amortization, and impairment, and stock-based compensation expense. That's how you get back from GAAP net income up to the adjusted EBITDA line, earnings before interest, taxes, depreciation, amortization, and stock-based compensation, which somehow didn't make it into the acronym for adjusted EBITDA. I guess the adjustment is you're throwing out the stock-based compensation. All right, so that gets you about the same adjusted EBITDA margin in Q4 as we saw in Q3. Because it doesn't have any of that weird tax nonsense in it anymore. It's been thrown out up here. And auto gross margin, very similar in Q4 to what it was in Q3. That's what I'm forecasting. We've already talked about production and deliveries, but here's just one more place you can look to see that in total. And again, my numbers include semi. If you're trying to tie these out and can't get them to tie, or you don't remember Tesla reporting these numbers, Tesla doesn't report semi production or deliveries. Then we've got a section here on revenue before currency translation impact by type. So if you wanted to know what the Q1, Q2, and Q3 numbers were without that currency translation impact, I have those shown for you here. Then there's a cost of sales section here shown by option type, same as the revenue section above it. And I have cost of sales percentages for all of those items in this section. Then we've got another section here for Tesla total deliveries by site and model. Pretty exciting. So you can easily see how many semi deliveries you should be throwing out to get to the numbers Tesla reported for total deliveries. So you've got it by site and model here, and then you've got it globally by model down here if you want to see just what the global Model Y deliveries are, or what Troy, Teslike, and I think they were for Q1, Q2, Q3. I know better than to question Troy's actuals for Q1, Q2, Q3. He does great work on doing a lot of research to figure out what those numbers were in his estimation. Then there's a total automotive revenue per delivery by model section before Forex. So before the impact of that foreign currency translation line, you can see what the total revenue per delivery is doing. And then we've got the revenue, this is automotive revenue we're talking about, per delivery by type. So I don't know if these overall averages are very useful to you, but you might be able to use them for something. Then there's the FSD sales plus other revenue deferrals line. GAAP earnings per delivery, non-GAAP earnings per delivery, adjusted EBITDA per delivery, if you like those numbers or want to put them on a chart. I sometimes do put those numbers on charts. EBIT per delivery is here. Trailing 12-month deliveries, revenue, adjusted EBITDA, non-GAAP earnings per delivery. And then this one is the non-GAAP earnings per delivery if you throw out the regulatory credits revenue, which probably is 100% flow through to bottom line profitability, or close enough to it that you don't care. Then there's revenue by type after currency translation adjustment. So this is the same info you see up in the top section. And these are just grouped into fewer buckets. So you got an everything else excluding stock comp bucket here. This is for that chart that shows you how Tesla makes and then spends its average dollar of revenue. If you're curious to know what that's like, not on a smoothed 12 trailing month basis, those numbers are here. And then the section below it is where I smooth them out on a 12 trailing month basis before putting them on the chart so that they're not very frenetically bouncing around. Try to keep that visual looking pretty clean so you can see what the trends are. Then I've got a section here for reconciling non-GAAP operating expenses with line items that get it back to GAAP operating expense. So these are the adjustments you need to make to walk from one to the other, most notably the stock compensation. Cost of sales percent by income statement line item. So I've got those for you here. If you're curious, hey, what's the automotive gross margin breakdown? What's the energy and the services and other cost of sales percentage? You got those here. Cost of sales percents by site and by model. So if you want to compare the sites against each other and see how much more profitable is Shanghai versus Fremont or Austin or Berlin, you can see those numbers here, or what I believe those numbers to be according to my forecast model. Then there's automotive cost of sales, regulatory cost of credits, cost of sales, extremely low. I do have a number in there, but it's less than 1% cost on regulatory credits. There must be some filing and administrative. There's got to be people who are working on that at Tesla, and they have a cost, right? Non-automotive, really high costs on solar panels, probably a very competitive market for solar panels. So if you want to price those competitively, you're not going to have a lot of profit left over, probably. Is my assumption in my forecast model anyway. Total gross margin percentage by site and by product. Well, we saw huge discounts in the price for Model S and Model X, so you see those down a lot. Hopefully those price cuts don't last for long. If you want to buy a Model S or Model X, these are good prices to do so. That may not last. Not financial advice, do your own research for entertainment purposes only, etc. I'm trying to move really fast through this to see if I can get through everything in this video. Here's the section I made for that automotive cash versus leased chart, so you can see all these metrics are here. If you want to pause and peruse, you can do that to see what I have in my forecast for Q4 and for next year. I've got a components of operating expense section here with different groupings that I use to make some charts. I got some employee count information here and revenue per employee, type metrics, profit per employee. I had to make a Brad Munkin response chart once when he did something very silly. He compared 2021 Q1 against 2022 Q1 as though that was a fair comparison. 2022 Q1 had an extremely tiny number on it, and then he was showing that it's been all downhill since 2021 Q1. I had to show him what every quarter since has been like if you compare all of them to 2020 Q1. That's what that couple of lines is about. Here's the per diluted share section. I think this is the last section that I showed in the 69 tweet forecast thread. But I'll keep going in this video very, very briefly to show you what else is in here that I'm not showing you in that thread because I ran out of space. I don't want to make more than 69 posts in that thread. So here's some info we got from Zach when he was the CFO in the Q3 2022 earnings call that helped me back into some numbers because he gave us more information than we normally get about profitability by site. Here's my foreign currency translation adjustment section. So I have to bring in my unadjusted numbers first. And then I have to make assumptions about the yuan index and the percentage of business globally that's transacted in yuan. And those coefficients. and then I make one about euros. And I figure between the yuan and the euro, that's probably most of Tesla's foreign currency impacts, or most of how they're doing business. I know there's some business being conducted in Australian dollars or Singapore dollars or whatever. There's, a bunch of those probably, but this is probably close enough to just do it this way. So I got a foreign currency translation impacts section here where you can see what the total impacts on revenue were. So here's that 0.8, 0.642, 0.634 that you see in the 10Qs, but then it's offset by the same direction total cost of sales impacts, right? 0.668, 0.392, 0.388. So those net out to these numbers, 0.142, 0.251, 0.247, as we saw in the income statement up top. And then is there more stuff below that? Yes, there is. I've got total Tesla revenue dollars by site and product. And then I have total Tesla cost of sales in millions by site and product. And I'm using those to make a sales volume rate and mix tab that's over here that I probably don't have time to show you. In the next video, I'll show you my investor letter, page 3 and page 28, once I've gotten those updated, and I'm sure they look good. Those will be in part 6. You can look forward to that. That'll be a shorter video. But for now, Loki and I have to say goodbye. That was part 5 of my Tesla earnings forecast video review series. If you enjoyed today's video, don't forget to click the like button. That's how the algorithm knows to recommend this video for other people like you to watch. So click that button. If you're watching me on YouTube, you can subscribe to me by clicking a link that I'll leave over here for you to subscribe for free on YouTube. But thank you to everybody who supports me, whether you're doing that on Patreon or on X, or by joining my YouTube channel as my executive producers, Kathy Kitchler and Rebellionaire.com did. And I'll see you in the next one.